All right, welcome everyone to today's Title Topics webinar. As you probably know, these are Alta's free presentations that we offer every month on issues important to title professionals. I'm Jeremy Yohe, Alta's Vice President of Communications, and today we've got a great program lined up that we're going to dig into breach notification requirements, the potential costs to resume operations following a breach, and examine the different stages of a breach, and then we'll wrap up with providing some good information on how you can prepare a data breach preparedness plan. Before starting, I just need to hit on a few housekeeping items. A copy of today's presentation can be downloaded from the handout section of the GoToWebinar window on your computer screen. If you're only listening by audio, shoot me an email at jyohe@alta.org. Again, that's jyohe@alta.org. And I'll send you the presentation after the webinar. All participant lines are muted for today's presentation. You can submit questions through the question box, and we'll hold some time at the end of the webinar. As an added benefit, today's presentation is being recorded, so if there's anyone in your office or others who you think this would be helpful in their daily business, you can send them to Alta's website, and that's alta.org/title topics. That's alta.org/title topics. And after the webinar has been edited and processed, it'll be uploaded there, and you can find an archive of all of the webinars we've held over the past 3 or 4 years. I need to thank Fidelity for sponsoring our Title Topics webinars this year. Their support allows us to continue providing these educational opportunities free of charge. With that out of the way, let me just briefly describe today's speakers, their bios. They're chock full of experience in this industry, and Christopher just let me know that both of them received some additional certifications. And he told me I've got to increase their stipend for today's work. So we'll see how that works out. But anyway, joining us today is Matthew Froning. Matt is Chief Information Officer of Security Compliance Associates. He's a former commissioned officer in the U.S. Air Force. There he was a federal agent and Chief of Computer Investigations and Operations for the Air Force Office of Special Investigations. And here he was responsible for investigating, managing, and directing the investigation of computer-related criminal, counterintelligence, counter-espionage, fraud, and undercover matters. Well, Matt, I didn't think I was going to get through all that.
Good job.
Also joining us, we've got Christopher Gulotta. Chris is founder and CEO of Real Estate Data Shield. Chris was one of the early speakers addressing the importance of compliance in connection with lender liability for their service providers and information security. Chris has represented lenders in mortgage finance transactions for over 20 years. Both of today's speakers are members of Alta's Best Practices Task Force. In addition, their companies recently partnered with PYA, a certified public accounting and management consulting firm. And this alliance offers a comprehensive compliance solution that includes certification to Alta's best practices, the Graham-Leach-Bliley Act, compliance to that, and employee training. And this is through a program called Certification Plus. So with that out of the way, Chris, I will turn the presentation over to you.
Well, thank you, Jeremy, and hello to everyone joining in. We're going to discuss a pretty interesting topic today. The life cycle of a data breach, what you need to know. Data breach is the thing we obviously most want to avoid, but as we've all seen in the news, almost anyone can suffer a data breach, and the real issue is what measures can you take to avoid it, to minimize your risk, and to ensure that if something does happen and you do have an intrusion and an incident, that you've got a plan in place, policies and procedures developed, so you're able to run through the fire drill with the aid of those guidelines and those checklists and policies and procedures, rather than trying to create that in the throes of dealing with an incident. Jeremy, if you could advance us, great. So I'm going to move through these first slides quickly because they really just set the backdrop. We know that our title and settlement industry more than ever is in a compliance age. We know that the lenders and regulatory drivers are what prompted Alta to develop their best practices to support the independent title and settlement agent and attorney and notary and escrow agent to have a format and a formula to be able to evidence compliance to the lenders and let them feel assured that their vendor supply chain is in fact a safe and secure one. And as we have to see ourselves as mini financial institutions and really have policies, procedures, and best practices in place like they do on a smaller scale so that we can show regulators, lenders, underwriters, all the stakeholders that we're compliant. And more and more we're seeing requests from the lenders for that evidence. Thank you, Jeremy. Just a little more on that. We've seen, let's start at the CFPB Service Provider Bulletin on the bottom of this slide, bottom left. That came out in 2012. It woke the lenders up. It reminded them that they're responsible for ensuring that their vendors are capable of compliance with consumer financial laws. Alta developed their best practices. The Federal Reserve also weighed in with an outsourcing bulletin specifically on the subject of lenders working with third-party vendors. As we know, the underwriters, almost all of them have best practice initiatives and support tools for their agents. Lender notifications, the Alta website has a great checklist and chart of maybe 10 to 15 different lenders and what they've had to say about certification. Alta Best Practice certification, which has really emerged as the standard in the industry that lenders can look to. Gramm-Leach-Bliley went effective back in 2001, and for the large part, our industry is still trying to pull itself up by the bootstraps and get to the level of compliance that we were supposed to be at in 2001. The FTC has developed some critical rules to enforce Gramm-Leach-Bliley, the privacy, safeguard, and disposal rules. We'll talk about them in a moment. And then the OCC, the primary bank regulator, came out with two important bulletins, one on safeguarding customer information back in 2001, and then a third-party risk bulletin in 2013, where they very critically looked at their lenders who they regulate and said, you've, quote, generally failed to properly oversee and monitor your third-party vendors. So if you wonder why we're in a compliance age, I think that mouthful kind of puts this all in context. Jeremy, if you would. Thank you. So in the old world we lived in as title or settlement agents, we had the State Department of Insurance, we had clients and underwriters, and that was pretty much our three-stakeholder universe. We know what insurance departments want, licensing and some regulation. Clients always want you to close the deal quickly and seamlessly, and underwriters want you to remit timely, keep your claims ratio low, and record timely. That was the world we lived in before. In the new world, thank you, Jeremy. We have, on top of that, we've got the CFPB with their Service Provider Bulletin and the TRID disclosure requirement, as we've all lived through. We have the OCC, FDIC, and Federal Reserve, as I alluded to before, coming out with bulletins specifically on the subject of how lenders are responsible for ensuring that their vendors are capable of compliance and for oversight and monitoring. GLBA and the Gramm-Leach-Bliley Act and the FTC rules have now been out for 15 years, and enforcement is creeping up on that. In fact, recently the CFPB found a company guilty of false and misleading conduct under the privacy laws. State and professional regulators are also weighing in more. We're going to talk today in detail about state data breach notification laws, which started in California in 2003. And now you're seeing, and 47 states now have data breach notification laws. And in the last few years, you're seeing the second generation laws crop up. 9 states last year passed new data breach notification laws. And Tennessee just modified their law in a significant way. And we'll talk about that in a few moments. Thank you, Jeremy. So what are we trying to protect when we talk about non-public information? So the whole context of this discussion of safeguarding consumer non-public information, the math behind it is a borrower's, what you need to be looking for digitally and physically is documentation that contains a borrower's last name or a consumer's last name, their first initial or their first name, coupled with any of the following: a social security number. This is just an example. This isn't an exhaustive list. Driver's license number, state-issued ID, credit card, or other financial account numbers. Some data breach notification laws are now expanding to include things under the definition of non-public information like usernames and passwords. So this is an evolving sport, if you will. And where does this information live in our world, if you will? Well, on the strictly settlement side, the mother loadable personal information lives on the 1003, the Uniform Residential Loan Application. We all know what's included in that. And we know when that comes in. That typically comes into our world at the end of a transaction when you're printing out the closing documents. So think about how you safeguard that document from the moment it comes in to the moment you've put it off in storage or up in a cloud, and how that document digitally and physically is being safeguarded. Tax returns, engagement letters, ID, closing disclosures, IRS forms, real estate transfer tax forms, and similar title documents on the title side. These are all documents where you know you're going to find non-public information, and you need to safeguard them physically and digitally as they move through from opening the file to closing the file. Key suggestions: start preparing now, delegate, develop your information security policies, start with an informal self-assessment, security self-assessment, but move on to a formal assessment. Make sure you've got disaster recovery and business continuity as part of your planning, and you're moving something into place that will actually work and will be adequate. Train your staff. Nearly 40% of all breaches occur at the human level, the employee level, so you could have the best policies and procedures and firewalls, and it won't matter if your employees are taking phone calls and following up on requests to wire funds to China instead of to the intended the intended recipient. Physical security essentials, you can see those. On-site security assessments, what I ultimately recommend, and then the 7-pillar ALTA best practice certification. Those are my key suggestions. These are the sources of compliance. You can glance through these at your leisure. We're going to move through it, though. Gramm-Leach-Bliley, as I said, went effective in 2001. Although it speaks to governing financial institutions, the way they define financial institution under Gramm-Leach-Bliley is rather broad, and it covers any company that's significantly engaged in financial activities. And according to the FTC, moving money and secured instruments from lenders to borrowers kind of puts us in the posture of a financial institution, and that's why we're governed by it. Breach notification statutes. 47 states, D.C., Guam, Puerto Rico, and the Virgin Islands have enacted such statutes. California led the way in 2003. If you want to know where the laws are going in terms of data breach notification laws, look at California, look at Florida, look at Massachusetts. Those 3 states seem to always be leading the way. Although there have been proposals for federal legislation, none has been enacted yet, and this is still under the state purview. So, state data breach and disposal statutes. Some states have separate disposal and notification statutes. Most states, however, combine them. But when they do speak about disposal, just remember they're not just talking about paper. They're talking about this information as it's stored digitally as well. Jeremy, if you would. So, California. Their breach notification law. Businesses must disclose in specified ways any breach of data when it's unencrypted, when unencrypted personal information was or is reasonably believed to have been acquired by an unauthorized party. So just to step back for a second, the common theme with data breach notification laws are the following criteria, and every state will tackle these criteria in their own way. How do they define non-public information? Have they expanded it to include, as the second generation laws that we're seeing now, does it include healthcare information? Does it include username and passwords and other things beyond the traditional social security number and financial account numbers? Then you have to ask what entities are covered. I think it's Georgia's the only state that is limited to data aggregators. Every other state requires any company that handles non-public information to comply with the breach notification laws. Some states talk about a breach having actually occurred. You'll see here in California, they instead, like most states, talk about when unencrypted personal information was or is reasonably believed to have been acquired by an unauthorized party. So the definition of what is a security breach is also a key criteria that states speak to in their data breach notification laws. The level of harm requiring notification is another obstacle that they tackle and consider. Whom to notify in New York, there's a specific list of government agencies that have to be notified, and credit reporting agencies as well. When to notify, some states will speak to notifying affected parties within a reasonable amount of time of detecting a breach. Some will say within 30 days, some will say within 45 days. And as these laws are evolving, that time frame is getting more certain, and they're moving away from language like a reasonable time after you detect a breach, and they're putting in firm time values and date values, and they're also reducing those from 45 to 30 days in many states. What gets included in the notification letter, each state has specific criteria for what needs to be included in that notification to the affected parties, and some states like New York actually have a form letter you have to use. And then what are the exceptions to the obligation to notify? Most states have an exception for data that was encrypted, where there was an intrusion, but the data that got out to an unintended recipient and an unauthorized recipient, where it was encrypted, usually companies do not have an obligation or a requirement then to do a breach notification. However, one of the changes in the Tennessee law was that they took away the exception to the requirement to notify for encrypted data. So that's no longer a safe harbor. The encryption safe harbor no longer exists in Tennessee. Really important trend right there. And then they're always going to speak to the penalties. What happens if I don't comply with the law? And some companies will do the math and say, we don't want to send out the data breach notification. We think it'll harm our reputation, harm our business. We'd rather pay the fines. And that's a decision every company has to make on their own. Jeremy? 21 states in the last few years have enacted legislation. And you can just see the statistics here and evidence of how this is all evolving. 23 states introduced or considered new legislation, with 15 enacting new laws. Kentucky just came on board recently as the 47th state. So you could see that you don't just need to be concerned with Gramm-Leach-Bliley and the FTC safeguard privacy and disposal rules. You've also got to be mindful of these evolving state data breach notification laws. And the other interesting trend in their evolution is they're going from being just a breach notification statute to, in their second generation, including a safeguard standard, and that's a specific term in privacy law and a specifically high standard. And they're also including, in many states, disposal standards. So on the state level, they're kind of catching up to the FTC and Gramm-Leach-Bliley as well. Jeremy, if you would. In 2015, 32 states introduced or considered new legislation, with 14 laws being enacted as of the end of 2015. So again, just more evidence of how this is an evolving subject, and how we need to, whatever states you do business with, you need to understand the data breach notification laws, and in your policies and procedures, you have to address that. For any state that you're going to do business in, you have to understand and have in your policy procedures what's expected of you, what forms are required, who you need to notify, when you need to notify them, and have that all worked out so that you're able to just plug it in and get about the business of notifying the right parties timely. Jeremy? Massachusetts is now considered the toughest data breach notification law, and it has specific minimum standards, which is interesting. It's one of the first states to have a defined minimum standard for requirements of employee training, requirements of an information security program, and it includes, as I mentioned, some states are doing, with a data destruction requirement. Okay. And you see here what they, just some language from their data breach notification, where they say that such regulations shall be designed to safeguard the personal information of residents and shall be consistent with the safeguards in the federal regulations. So here on a state level, they're introducing a safeguard requirement similar to those on the federal level. So real interesting change here where the regulation's increasing. Florida, about a year and a half ago, came out with their new data breach notification law that did a few interesting things. They shortened the notice requirement from 45 to 30 days. They're requiring companies to take reasonable measures to protect and secure data, so that sounds like a safeguard standard. They have a document destruction requirement as well. Customer records containing non-public information must be destroyed, and remember, that's not just physical, that's digital as well. If over 500 people were affected, they've got to now notify the Florida Department of Legal Affairs. So a real increase in what's expected in the event of a breach here. They also went on to expand the definition of non-public information, as I mentioned before. So it's not just what we talk about under Gramm-Leach-Bliley, and this is going to happen generally as more time goes by. An individual's health or medical history is now considered non-public information. If it's breached, you've got to do a breach notification. Any unique identifiers by health providers, and a username or email address in conjunction with a password or a security question. Now that also is considered non-public information. If it's breached, you've got to do a notification in Florida. So the new obligation to report an incident that has or is not unlikely to result in harm, and this speaks to when written confirmation of a determination of no harm generally is to be provided to the Florida Department of Legal Affairs. This is where a company would go to the Florida Department of Legal Affairs and make the argument that no harm is going to occur. That's kind of shaky ground to go out on, but companies might weigh the risks and decide that they'd rather try that than do a breach notification. Just so you know, in the retail world, when companies send out a breach notification, apparently customers 37 or 38% of the time will not go back to that customer. So that's what we're all afraid of, having to send out these breach notifications. And again, the 500 or more requires notification to the appropriate Department of Legal Affairs in Florida. They also add a requirement that they take reasonable measures, as we mentioned, and covered entity is now expanded to cover any commercial entity that acquires, stores, maintains, or uses personal information. And that's what we deal with when we deal with tax returns, 1003s, transfer tax forms, and the like. So we come squarely under these laws. Some of the fines now run up to $500,000, $1,000 each day that a data breach goes unreported. And there's no private cause of action right under the new Florida law. So it's really got to be the government enforcing this. And in each state, the data breach notification laws are enforced by the Attorney General. And in this state, it also requires that, as we said, documents are properly disposed of, and there's a safeguard standard. Jeremy? This is the form in New York, one of the forms that you have to complete when you go through a data breach notification. So for any state that you do business in and you have consumers' information from that state, you've got to understand their laws, have an idea of who you need to notify and when and what's unique about their laws. You need to be updating that constantly because, as you can see, these laws are evolving as we speak. And in states like New York, you should have the actual forms that they're going to require you to file. Jeremy, I think the next few slides give a little more information. So this tells you who you need to email, the Attorney General, the DFS, and the like. And here's a sample letter that you would send out to consumers notifying them of the breach. And these are just the backdrop here. The Federal Trade Commission developed the three main rules: the privacy, safeguards, and disposal rule. Things you need to be mindful of in order to avoid a breach. And I'm going to pass the torch to Matt Froning, and I'll be back in a little while for questions and answers. Thank you.
Thank you, Chris. This is Matt Froning with Security Compliance Associates. Today I'm going to go over incident response plans and kind of what you could expect or hopefully never have to deal with from a data breach response program. So one of the most important things when it comes to data breaches is being prepared beforehand, having a plan in place beforehand. So setting up and creating and establishing an incident response plan within your organization is going to be a key component of that, because the last thing you want to do is have an incident occur and then try and figure out what steps you need to take. So putting that plan together is going to be an essential piece to your success if you do have an incident in your environment. As part of that plan, what you want to do is you need to first identify who's going to be a member of that incident response team. You want to identify the key stakeholders. This could be members of management, obviously your IT support, and possibly third parties from incident response organizations that deal with data breaches on a regular basis, and knowing who you're going to contact. You also want to establish some of the procedures that you're going to be looking at for analyzing and containing any potential data breach. Depending on what type of data breach it is, you want to be able to cut off any type of data leakage, and so having that within your plan is going to be a key component, along with a plan for notifying those affected individuals. When you start putting your incident response team together, you're going to divide out those roles and responsibilities, and part of that is going to be notifying affected individuals. So having those roles and responsibilities outlined within the incident response plan and making sure key members of that team understand what their roles and responsibilities are going to be a key component to your success in minimizing the effects of a data breach. You also want to look at establishing remediation measures that will be taken when a data breach occurs. So if you have a virus, you're going to have steps that you take to remediate those and make sure that the viruses are removed from the environment completely before going back to normal operations. And then, of course, collecting the relevant resources from the legal communications and developing a test plan and training your personnel on how to respond in those situations, because like I said earlier, the last thing you want to do is have somebody see these, even if you have an incident response plan, not having your incident response team members understanding what part of their the plan is their role. So next slide, Jeremy, please. So as I said, the key part is being prepared. You want to make sure that you define the policy and the scope, identify those key personnel, look at different types of incidents that could occur, whether it's a network intrusion, we're starting to see ransomware, you have viruses and other forms of malware. So understanding those different types of incidents that could occur and the roles that each individual will play along with that. You also want to identify those countermeasures. One of the examples with ransomware is if you have backups of your data and somebody encrypts one of your files and is trying to use that through ransomware, trying to use that against you, if you have those backups and you've identified those countermeasures and you've created backups, then that risk is going to be lowered quite a bit. And then, of course, taking corrective actions and monitoring after you've cleaned up from an incident are also key parts of that incident response plan. So some of the key initial steps when we're talking about a data breach and what you're going to be looking at doing in order to recover from that breach and handle that breach are going to be the next steps coming forward. And here's a few of the key initial steps. Obviously, the first thing you got to do is you got to stop the bleeding. You got to take a breath and you have to stop the bleeding. Before you can do anything as far as a recovery standpoint, you got to make sure that data is still not leaving the environment. So what you want to do at first is block any additional data from leaving your network. That could be as simple as having your IT person out. I use the term simple, but just cutting off access to the outside world, not allowing any traffic to leave the network until you've been able to identify where the data leak is coming from, what the cause was, and how it's getting out of there. But right there, you also need to step back and gather your thoughts. After you've stopped that bleeding, you want to take that breath and you want to gather your thoughts, gather your incident response team, and start figuring out how you need to go about responding to this incident. So this is where you're going to fall back to that incident response plan. And you're going to make your notifications both internally to staff and externally for your third parties or for any other individuals or organizations that you're legally or contractually required to. And then you want to establish that game plan. Now that you've caught your breath, you've been able to stop that data from going out any further, now it's time to establish that game plan on what the next step is going to be. Next slide, please, Jerry. So one of the key things is finding help. You want to have the right experts in the right places to support you and help you through this data breach. So obviously when you're looking at a data breach, you're going to wind up looking at computer forensic and incident response experts. You don't want to start looking for them after the data breach occurs. You want to have an established relationship where you know you can reach out to them and they're going to respond in a timely manner. You also are going to be looking at your internal and external IT support, making sure that they understand their roles and make sure they understand their responsibilities as far as responding in a timely and effective manner when a data breach does occur. Your internet service provider will be another area of support. They're going to be able to help with blocking traffic, with being able to track where traffic was going. And a couple others, obviously an attorney from the legal standpoint, your underwriters and your lenders from your reporting requirements. If you have a data breach that's affecting them, they're going to be able to provide some support to you as well. Next slide, please. So after you've found that help, what you're going to want to do is it's time to start recovering. You want to first, after you've had the forensic expert and your incident response expert and your IT support, gather all the information, stop the bleeding, extract any malware that may be on there, rootkits, whatever it may be that exploited your network. You want to verify that it's been eradicated from the network. Make sure that no more traffic is trying to leave out to those nefarious sites. You also want to complete a lessons learned. Find out, what caused the data breach. Was it an employee clicking on a link in an email, opening up an attachment to an email, plugging a USB into the system? All of these things can be it. So you want to find out what that cause was and complete a lessons learned and provide that lessons learned as a training tool for your staff and for your IT support as well, because it will help them and help better protecting you in the future as well. At that point, you'll start looking at reestablishing your connectivity. When you do that, a key part and an important part is monitoring that network traffic afterwards to ensure that you have removed any malware and any and all malware from the network and that there is no more nefarious traffic trying to leave there. So you want to monitor that traffic at that point before completely resuming normal operations, allowing your IT support to go back to their normal functions. You want to make sure that you've monitored and there's no more bad traffic going out. There's no malware still sitting on the network somewhere that you didn't find it before heading back to those normal operations, and that's when you'll resume those normal operations. Some of the major concerns of a data breach, obviously from the monetary standpoint, you're talking about lawsuits and fines that are associated with it. But also from the monetary standpoint is the damage to reputation. As Chris alluded to earlier, the damage to your reputation is a damage to your bottom line as well. When people lose faith in your ability to protect data and protect their information, you may be seeing a downtick in that business side of the house. Another major area is not being prepared, not knowing how to respond to a data breach. When you don't have a plan in place and you haven't done any practice or exercises to implement that plan, not knowing how to respond to an incident can magnify the impact that's associated with it. And of course, the cost of resuming operations. As I talked about earlier, you have computer forensic experts, incident response experts. If you have a third-party IT, it's more hours associated with them coming in to support you. So you have those costs. And I will tell you is from the computer forensic and incident response standpoint, especially when you don't have an established relationship and you're looking for an immediate response, you're looking at a high-ticket dollar item for having those services be brought out and supporting you. You're looking at $300 plus per hour for each individual that's coming out to support you. Next slide, please. So, and then here's the major impacts, the impacts of major breach. Obviously, you're unable to continue normal operations. So now, not only do you have the costs associated with responding to it, hiring individuals, but also you don't have the funds coming in because you're not able to continue normal operations, finish closings. You've also lost the trust. You've lost the trust of the public. You've lost the trust of lenders, underwriters potentially, and you've lost future business opportunities. You may have to go through and improve yourself from a liability standpoint that the underwriters and lenders can have faith in you being able to protect that data in the future if you had failed to protect it in the past. Next slide. You know, these are just a couple examples of the reputational costs. Obviously, you know, we've all heard of the big data breaches with Target and Walmart and Home Depot. One that's near and dear to my heart is the Office of Personnel Management, you know, being the former government guy who had clearance and has all of that information out there in their systems and all of those records that were lost. You know, there's a loss of trust there, and it's something that's very difficult to pull back and get and earn back. You know, when you're talking about Walmart and Target and Home Depot, they took major hits at the beginning just from the costs associated with recovering and also damage repair and reputational repair that they had to do. Next slide. So what is the cost of a data breach? Well, IBM and the Ponemon Institute study, they showed that on average during a data breach, 28,000 plus records are breached for every time that there is a data breach associated with an organization. And they estimate that the cost associated with each record is $217. That's divided between indirect and direct costs. So those indirect costs are, you know, the loss of clients and having that turnover, and then the direct costs are those ones that we talked about, the hiring the consultants and the legal fees that are associated with having to have an attorney and the reportings. So at $217 a record, that can add up pretty quickly. And then also, it's heavily regulated. You're going to be heavily regulated after that. You know, financial institutions have higher than average costs, and in this industry, you're considered a financial institution. So those costs are going to be higher than the average costs associated with a retail organization or with a mom and pop store that has very little from a NPPI standpoint. Next slide, please. So I think the overall point associated with data breaches, and the key is, while there's no guarantee to never have a breach associated with your organization, as long as you have connection to the outside world, your potential risk. And the question shouldn't be if, the question should be when in your mind. And the key is having a security program in place that best limits and protects you so that hopefully you become a harder target and they go on to the next softer target without bothering you. But if you do have that breach, that you're prepared for it, you have that plan in place, your people understand what their roles and responsibilities are, and you can minimize the impact associated with that breach, and hopefully stop it before you lose any critical data or any sensitive data that's associated with clients, with other associates that you work with on a regular basis. So with that, I'm going to turn it over to Jeremy, who will be opening this up for a little Q&A.
Yeah. Thank you, Matt and Chris. Great insight on breach notification requirements and steps to prepare a plan. Always important to be ready. And as you guys mentioned, you can have the best systems in place, but you got to have a plan. You got to have your staff trained on how to respond. We have had a few questions come in, so we'll get to those. Just as a reminder, if you have any questions, want us to pitch to the panelists, just submit them through the questions box, and we'll spend the next 15 minutes doing a little Q&A. One that came in early on, and this was for you, Chris. If you have any ideas about what reasonable measures consist of regarding data protection.
Yeah, it's an interesting phrase. So all the regulators in this space, whether it's privacy or lender oversight in the context of risk, so whether it's the OCC, the Federal Reserve, or the FDIC in the context of their regulations with lenders in terms of risk, including risk with their third-party vendors, they give broad leeway and what they'll call flexibility to the lenders to define their own risk assurance program. And the FTC does the very same thing with regard to information security. They know that each company has its own unique risk vectors depending on their industry and where they are in their industry and how they do business. So either in an effort to be not specific and clear, or in an effort to be generous and give companies the latitude they need to define appropriate information security measures, at the end of the day, there isn't a lot of very clear guidance on what reasonable measures are. What I can say is this, though. There are concepts out there that regulators use that have an understood meaning in the information security and privacy world. So, and you've seen them come up today in the context of data breach notification laws. So we all know what document disposal and destruction means. We all know that we have to pulverize either paper or digital media that contains non-public information. So that's one example. In the disposal context, it's pretty clear what's expected. Up front, what they expect, and states like Massachusetts are the first states that actually impose a minimum in their data breach notification laws, a minimum standard that requires that companies have an information security program. And that typically is understood to mean you have your policies and procedures in place, you've trained your staff, you've identified, you've looked at your security environment and said, what are the risk vectors that I have? And you can prove through your program that you've identified the unique risks. You've taken measures to safeguard the information given those risks, and that you've done ongoing and usually annual assessments to ensure that the measures you have in place, as Matt was saying, are actually working and are by design effective. And so that's generally what's meant by reasonable measures. And just one last thing on it. Of course, and the FTC is a great regulator in this context. Matt and I have sat on panels with them at Alta conferences on a number of occasions. And what's really great is they understand, and the representatives who spoke with Matt and I specifically spoke to this. I asked them to. They understand that a 5-person title agency or law firm or settlement company cannot provide the level of security that a 50-person company can. They don't have the resources. They don't have the depth. However, minimum standards, according to the FTC, include policies and procedures, disposing of information properly, using encryption when you're sharing non-public information, training your employees. Those are the basic fundamentals, and the guidance I would give is look at the FTC Safeguard Rule. There's a great booklet available on the FTC website called How to Comply with the FTC Safeguard Rule, and I'd highly recommend you Google that, and if you reach out to the FTC, they will ship you as many copies as you want for free.
And you can also find it on Alta's website, alta.org/cyber. There's a lot of resources there to develop your policies and procedures. Kind of a follow-up, Chris, on the regulatory vagueness of reasonable measures. When you're talking about the state regs and monitoring what's evolving there, and there's been a trend of incorporating safeguard standards. Could you talk about what maybe regulators are looking for as standards for safeguarding data? Is that like encrypting data, or is this developing the policies and procedures in your action plan?
Good question. It's all of those things. When when a regulator uses the term safeguard, and by the way, that term is now also popping up in Attorney Code of Ethics. If you look at the comments that states have to the Professional Code of Conduct, you'll see in the comments that give the background on what's expected, they're using that term safeguard. Safeguard is a charged term, if you will, and it means that you have to have things like an information security policy and policies and procedures in place. You have to train your staff. All the things we've talked about. You have to encrypt data. You have to consider the unique risk vectors you're in. So in our environment, you know, for an industry with mostly small companies averaging 7 to 10 employees, we have a disproportionately high amount of super toxic non-public information that comes through our office every day, physically and digitally. We went through the types of documents that contain them. The 1003 is the mother lode of non-public information. So even though we're small companies and we don't think of ourselves as having to protect non-public information, we traffic in a lot of it. We are exactly the kind of company a data thief would love to breach and get the information from. And as Matt said, it doesn't have to happen in a sophisticated digital way. It could happen in a physical way. I know of a title agent who had an employee who was copying 1003s and tax returns for a friend who was selling them to an identity theft ring. And they were shut down for 3 months and had to bring in forensic experts, and then had to take security to the level of nearly a national vendor or an underwriter, just as Matt was saying, to win back the confidence and trust of their clients. So one data breach could pretty much put you out of business, and the cost of compliance is a lot cheaper than the cost of non-compliance.
Well said. Matt, this might be for you here. This is more of a business operations question, and Kevin was asking you, how do you go about normal operations with your USB ports disabled for all employee workstations? So his question is, what's the best way to share transfer data?
Well, the best way to share and transport data would be either through a secure portal or secure email. If you're looking at doing that, if you're needing to share that outside of the organization, if you have certain service providers that require it, you just can't get around using a USB. It's having a gatekeeper within your office. You know, restricting it to just one individual that has that access, and limiting that access to approved USB devices. So it can only be a device from your organization that you've established you're running scans against on a regular basis to protect you. You don't want to let a third party bring in a USB device that you don't have control over. You don't know where it's been. You know, as an example, and we did this for a test back when I was with the government. We actually went out to a DoD cybercrime conference, and while we were out there, we grabbed USBs off of one of the vendors' tables that they were giving out as giveaways, and we took those back and we put a little beacon that phoned home. You know, nothing nefarious or anything, but we just wanted to see how many of those would get plugged into government systems after they left that that conference without being scanned or anything. And sure enough, we had a almost 40% success rate that were, or I should say an unsuccessful rate of those USBs being plugged into devices on the government networks. So limiting that exposure, those could easily contain malware or something that infected an environment. So again, the keys are, if you can use encrypted email or a secure portal in order to share that information, that's the best way. As a backup, having a gatekeeper using USBs that only you authorize, and limiting the access to USB access to only those devices through your IT, and limiting the network settings.
Thanks, Matt. That's scary on the little test you ran. That you can see how quickly a virus could, be spread through systems. Okay, so
Jeremy, if I could.
Yeah, go ahead.
I'm sorry. So I saw a follow-up question to the one you asked me before, where it talked about what if the breach was caused by human error as opposed to hacker skill. Mm-hmm. So we know from studies like the Ponemon Institute and Verizon that nearly 40% of all breaches happen at the human level. And you have to remember, when you think about security, that security experts like Matt, they don't look at your staff as, great title readers or counsels or clearance officers. They look at them all as risk vectors, because the human is the highest risk vector in the security world. And that's why it's so critical to train your employees of what are the obligations out there to safeguard information in our universe, in our industry, and what are the best practices you need to take. And in our industry, unfortunately, we're kind of stuck between a rock and a hard place, because on the one hand, we're busy trying to do our daily routines and get through the workday, and we haven't had a culture of privacy and information security compliance. We didn't grow up in that. So employers and managers are trying to change the culture in their company, and it's a difficult thing to do. And what makes it even harder, and what puts us back between the rock and the hard place, is that the third parties we do business with, the realtor referring business, the attorneys that we have to deal with, sometimes even the very consumers or the banks that we're working with, they're resistant to secure email. They're resistant to a lot of the procedures we have to have in place to protect them and to be compliant. So it's a difficult process we go through. And to get back to the human aspect, really important that where the pedal meets the metal at the employee level, that they're armed with an awareness of what's expected of them, what's at risk to the company and the consumer and themselves, and what best practices can they employ on a daily basis to safeguard against the very things that we're seeing happening and seeing reported in your, in your newsletter every week, Jeremy, with, BEC attacks, or, cyber fraud, or social engineering attacks with funds being wired to a nefarious source?
Yeah, the hackers are definitely very creative. There's no shortage of news. And speaking of putting the pedal to the metal, we got about 5 minutes to go. I'd like to try and get through, 3 or 4 more questions before we get to the top of the hour. Chris and Matt's contact information is in the slide deck, so if we don't get to yours, please feel free to reach out to them. We're not going to dig into too much about the different encryption options and what's safe, what may still be open to being hacked. We've done a webinar previously on a lot of the different email encryption services that are out there. So go to alta.org/title topics if you want some more information specifically about that. Interesting question about the state data breach notification requirements, and Jefferson asked that it looks like these maybe pertain to a lot of breaches of IT systems. Do these apply maybe to physical breaches resulting in loss of NPI? Specifically asked maybe a FedEx package is lost.
So some of the statutes, and certainly the earlier ones, spoke to information in a digital form. As these laws evolve, they're speaking generally to the newer ones, to any information that's taken by an unauthorized party, or even where you have reason to believe that it may have been taken by an unauthorized party. So it doesn't just cover, as these laws evolve, more and more they're covering physical as well as verbal, as any source of a breach. Okay,
thanks, Chris. Question about data retention. Wayne would like to know, this is going to probably vary state to state, but how long should title professionals retain records before destroying them?
No longer than you're legally required to.
And that's the best answer. Whatever your state DFS or ethics team, if you're an attorney, whatever's required of you, the day after that, it should certainly be destroyed properly, whether it's digital or physical.
Yeah, and the reason I say that no longer and you legally have to is because when you're looking at a data breach, especially from the network side of the house, it's not like grabbing some files off of somebody's desk and walking out with them. They've got all of that they can walk out with rather easily, and going back beyond and having those data records from 10, 15, 20, 30 years ago up on your network shares or on a server somewhere is just opening you up to greater risk and really greater penalties and costs.
And so a best practice there, to follow up on Matt's saying, is what's Matt's saying, if you feel like you can't let go of those documents and that information for client service reasons, take it off your network, encrypt it, and have it on a hard drive somewhere in an encrypted format in a vault or something, so you can get to it if you need to, but not something that a hacker or a data thief can easily get to.
All right. Question about, had actually two on this theme, and wondering which state notification law they got to follow. So it's a transaction may start in one state with the seller or
buyer
in a different state, but the title company's in a different state. Data is maybe stored in a different state. Which state regulation would you need to adhere to?
The general rule is that that the obligation follows the data. So if the data is stored if the title agent is in one state and the borrower is a resident of a second state, certainly the state the consumer is a resident in, the resident who was was affected by the breach, certainly that state needs to be notified. But there's an argument that if the data is stored in a third state and that's where the breach actually occurred, that you've got to do a notification there as well to the appropriate authorities. The whole purpose of these statutes, just to keep in mind the big picture, is that the state regulators and legislatures are under enormous pressure to respond to the rising number of identity theft issues going on in their state. And so in reaction to that, I think, so in Illinois, for example, their Attorney General has proposed new regulations with regard to data breach notification because of the mounting, and this is happening in every state, because of the rising number of identity thefts in their state. So they're constantly increasing the requirements and the scope of the requirements to address that.
All right, thank you, Chris. We are at the top of the hour. Again, if we didn't get to your question, there were a few more that we didn't get to. Both presenters are more than happy to discuss with you your question. Looking ahead, our next Title Topics webinar will be held in June. Then we'll focus on 1031 exchanges, and we'll be talking about how to handle these transactions, potential changes that could affect this market, and other recent developments. We're going to be skipping a month because in May we're going to be holding our second presentation in our compliance webinar series, and next month we'll be focusing on RESPA and talking about the basics of sections 8A and B. So keep an eye out for information on that webinar. Matt, Chris, again, thanks again. Any other parting comments you'd like to leave with our listeners? There was one more comment by Joe on a lighter note. He says, when discussing Massachusetts, why you had a Boston Red Sox logo, go Yankees.
I think we all agree, go Yankees.
No, it's go Mets, but that's all right. I would say the parting comment I would have is preparation is key. You guys have been in business and you've prepared in order to be successful in your business on a day-to-day basis. This is just another way of preparing to keep yourself successful and keep yourself from having a situation where you have a negative impact on your business. And preparation is the biggest key, is my bottom line for data breaches.
All right. Well, with that, will bring us to the conclusion of today's presentation. Again, Matt and Chris, thank you for joining us. I hope all the listeners found the presentation useful. Take care, everyone.
Thank you.
Thank you, Jeremy. Thank you, everyone.